How about selling iron butterfly today on Nifty? So if I have to draw an iron butterfly, I think it will look something like this. Basically, I'm interested in the short strike, which should be around 17,700. What you are basically saying is that market will stay within this range. But the issue with this position is that this position is good for flat markets. Although the market looks like it is flat, the directional bias is up. As long as the directional bias is up, I would not advise taking the strategy, but I think it's just for today. You are thinking about it. On any expiry day, the respectable premiums are always around the at the money option. So you will only find good premiums around 17,700 levels. So that also is one of the reasons why traders often try and find out strategies that will help them with this kind of market. So let us try and establish one. What we do is we use calls. Let's try using calls. So 17,700 we short that call. We sell two lots, and then we buy one lot of calls. Okay, and we add another row of long call. Let's go 200 points out of the money and 200 points in the money. 17,500. Make this 50. Make this 50. Let us look at the graph. This is what I was expecting. So here you can see what is the payoff. You get somewhere around 3,825 rupees as your maximum profit and 6,175 as your max loss. Upper protection is around 17,776 and lower protection is around 17,623. So you are expecting the markets to stay within a 150 point range, roughly around 17,700. Is this a good idea? I really don't know, but let us plot these strikes on our chart. Let us go to this 17,775 and 625. So this is this is the range that we expect the markets to stay within. And obviously, if you go to this extremes, you are not making any money. You have to stay in the central part of this range to make money. And as you start to move beyond this range, you will start making losses. So if I have to draw this position for you here, this is the area where you make money, and beyond this you make losses. So now the question to ask is, do you think the markets will stay within this range? As simple as that. If you believe that the markets can stay within this range, you can think about establishing this position. It is basically a bull call spread and a bear call spread. Now asking whether this position will work is like trying to predict that market will stay within this range. That is where my personal trading philosophy deviates from so many other traders, is that I don't like to predict what markets will do. I don't know how to do that. I don't try to do that, and I am very happy that I have moved on from that phase where I was burning the midnight oil to find a way to predict the market successfully. Now I am out of it. Just a couple of weeks ago, we tried to do that and we paid the price, heavy price. My usual approach is to find out what the directional bias is, stick with that directional bias. Now, today the market is moving sideways, and you can argue that there is no directional bias, and you can see that the VWAP is flat, this and that. Yeah, I agree, there is no directional bias at the moment. But if you look at it from a little higher time frame, you can clearly see that the value is developing higher, and that is clear directional bias. Now, when I say there is no directional bias on a shorter time frame, I am ignoring that there is a clear directional bias on a higher time frame, markets can surprise me. Markets can surprise me, and maybe they will go sharply higher, they'll go sharply lower, and we just saw there was an anomaly on Bank Nifty, but still we are seeing markets going sharply higher. So my point here is that not to bet on strategies where you have to predict market staying within a certain range, this and that. Trade with the flow of the market. The flow is nothing but the directional bias. If it is up, just stay with it.